Hello, fellow traders. 'Tis I, TheRumpledOne, and coming to you on Wednesday, July the 8th. The year's 2020. Let's talk trading. Trading step by step. Today, step 3. But before we get started, just a reminder, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, trading step by step. Step 3. Well, step 1 was managing the risk, getting your risk down, calculating it properly. And step 2 was brain management, making sure you don't do any of those things that you shouldn't be doing with your brain. Today's step 3 is money management. Now, the thing about money management is how closely it ties in with brain management, because this is between the two, it can really put you into a tailspin if you're not paying attention and if you basically don't have your mind right. Okay, number one, you need to take profit before the market takes it back. And this gets really tricky because you could be up a pip and you go, well, do I take the pip? Next thing you know, you're down 3 pips and you wish you had taken the pip. Or you're up 5 pips. And then it's like, do I take the profit? Then the next thing you know, you're down 10 pips and you wish you had taken the profit. Then you're up 10 pips and it starts going against you. Maybe you punch out at 8 pips, then it turns around and goes at 20 pips. Now you're thinking, oh, I wish I hadn't have gotten out. You see, that ties right back into the brain management. The thing with the money management is you have to have your plan before you enter the trade. Then you execute the plan. And so long as you execute the plan, what happens afterwards doesn't matter. Is of no concern of yours because it doesn't affect you because you are out of the trade. And your job from that point on is to wait for your next opportunity to enter a trade. And which comes from what? Your plan. So you have part of your plan is your entry strategy, and part of your plan is your exit strategy. And the thing is, once you enter the trade, it's all exit strategy, which gets back to the money management. We already covered the downside. That's with your risk. So you know, unless there's some unforeseen circumstances, you know what the worst thing is that's going to happen to your trade. So take profit before the market takes it back. Now, I've done a few videos on exit playbook, so I'm not going to repeat the entire process here. But what you need to do is you need to write down on a 3x5 card or post-it note, or even using the TRO My Notes, put it on your screen. What do you do when you're up 1 pip? What do you do when you're up 2 pips? What do you do when you're up 3 pips, etc., up to the first 10 pips? You need to know exactly what you're going to do. So if you're up 3 pips, maybe you just wait. If you're up 5 pips, maybe you move your stop up to break even +1. If you're up 10 pips, maybe you move the stop up to break even +5. Maybe you take half off the table, move the stop to break even. So you have to do this ahead of time. And so long as you do this, and so long as you execute it flawlessly on each and every trade, then no matter what happens, so you followed the procedure, and either the market pays you or the market takes from you. Because there's nothing you can do other than that. It's really that simple. And sometimes if you let your brain get off track and start to think about I wish I hadn't, you know, I wish I hadn't gotten out, or I wish I had gotten in, or, if I don't do this, I'm going to miss out, or, you know what, if I don't do this, I'm going to lose out. And then it's like, oh, I wish I hadn't have done that, regret of being stupid. So you see, do you understand now how close the money management ties in with the brain management, and why When you get the risk down, you get your brain handled, and you get the money management, that's your that's your pyramid. That's your three-legged stool of trading, because it doesn't matter what you put on top of that. That's your foundation, because it doesn't matter what method you use to get in a trade. After you get in a trade, it's falling back onto this foundation. I hope you understand that. So think about it. First three steps, I didn't talk about any methods of trading, not a one. That's because you have to have these three things down first. This is the foundation. This is what you build upon. And if you don't get any one of these things right, what you build is going to crumble. That's just the way it works. If you don't get this right, it's going to crumble. You can use squiggly lines for all I care, but it'll be okay so long as you have your wrist down, your brain handled, your psychology, and the money management. So I really hope this sinks in. And if it hasn't, then just keep watching these first three steps over and over again until it sinks in. Until you've got this down. You should not enter a trade until you have these three things down. Let's move on. Okay, for the week, you can see we just hit the 126.00 here. So the pound for the week's moving up. We still have these three unfilled gaps, which it's Wednesday. Well, anything could happen. They could still fill. And here on the pound, very interesting. You see, it dipped into the opening range for the week, and then it shot right back out of it. So, and you can also see it's making a higher high from yesterday. Got a higher low, higher high. And we've got 4 green days in a row. Once again, you can see it. Month is up 201. The week's up 140, and the daily's up 61. Now, remember I talked about something, I believe it was last week. I gave you guys a little tip, and I mentioned that at some point during the month and during the week that the daily rat zone and the weekly rat zone are going to be the same. And at some point, during the month, the daily, weekly, and monthly rat zone are all going to be the same. So guess what it is right now? All the same. So it's just something to think about. If price reverses out of this, it could go further down. So right now, this is opportunity time for red rats. I'm not saying to jump in today. I'm just saying sooner or later, one of these highs is going to be the monthly high. It could be today, could be tomorrow. But this could be the monthly high for the month of July. We don't know. Nobody knows. We won't know till the month's over. So you have to trade accordingly. Inside bar, there was a nice breakout yesterday. Today, we've broken through the high. We're up 7 pips above yesterday's high. But look at these ranges. Only 2 over 100. Pretty compressed day. Pivot point, it was right in the short zone. So there really wasn't a bias. It has to be outside the zone for the bias to be on. That's the way I trade it. You can still fade the pivot, but for the strong bias, it really needs to be outside. Once again, we are in the rat zone. The range is large enough at 93.3. Looking for reversals. Just be careful because it just barely broke out of yesterday's high. And we'll see in a few charts that there could be some more range left in it. More wind in its sails. We hit the weekly R1. We haven't hit the weekly pivot. And we're almost taking out that missed pivot here. of 126.03, which happened back on June the 17th. As you can see here, we broke out of the wick zone. So we were out and in, out and back in, and now out again. And you can see here the same thing happened on the bottom side. Now, let's look at the range. The daily range, 93. It's only at the 20 percentile. You see yesterday hit the 55 percentile before there was any movement. So right here, it's a 20. There could be more gas in the tank. You can see 2-3 days ago, there wasn't much left. 4 days ago, there really wasn't much of a range here either. So price could get higher from this level. We'll just have to see what happens. And looking at the H1 range, only 18 pips so far. Out of the last 4 hours, 20 was the lowest. So there could be more gas in the tank. And that's how you read it. Oh, and one other thing, somebody sent an email. They said, hey, I loaded up a bunch and they didn't work right. You know, I moved the XY coordinates. That's not how it works. You move the XY to place it, but you have to give it, each instance has to have a different indicator tag. And so you see that one was 6, this one was 7. You just give it a different number. Or I think, yeah, you just give it a different number. I think in the MT5 version, you can actually give it a name or letters. But that's what you do. And then each instance. And the reason why is, I'll just let you guys know. Let's find these objects. You see here, ranges 2, ranges 3. So what happens is when you remove the indicator, it cleans up its trash, it deletes everything, and when it starts up, it also deletes everything. So ranges 2, it'll delete all the ranges, all these objects that start with ranges 2, but it won't affect the ranges 3 or the ranges 1 or the ranges 4 or the ranges 6, 7, or 8, 9, because those are different instances. So that's why you have to do that. So just remember that. Price action, once again, candle color at the line. Candle color at the line, H1. I mean, if you wanted to, you could do H4 candle color at the line. But at the color at the line. I mean, and really, you can even do the D1 candle color at the line. Just pick a time frame. I like to do the hour because when you look back here at the hour ranges, you can see here, these are all over 10. So no matter where it opens in that between these two lines, you're going to have an opportunity, most likely, to take some pips. Now, every now and then, you do get your fingers burned. So if you would have went short here, like I did this morning, I had to take the loss. But then again, you see what happened going the other way. And that's how it works. I mean, it's real simple, but you have to have your money management down, step 3, your brain management down, step 2, and the risk management, step 1. You see, you have to determine how much you're willing to lose per trade. Get that out of the way first. Then you got to get your mind right. You got to be in the right frame of mind to focus on the process of your trade. You know, in this case, long, if the candle color is green at the line, the first line, short at red. We even have it marked for you now. Very simple. Very simple. You just have to do it. That's it. You just have to do it. And then your exit strategy. Take your profit before the market takes it back, because it's not what you trade, It's how you trade it. So go out there and drain the banks. Rumpled one